Okay, guys, real quick. So yesterday the market just took a massive dump, like huge bearish engulfing candle. I don't want to say across the board, but for the general market. So look at the Nasdaq, like this huge engulfing bearish candle close at low of day. I'm not too sure why the huge sell-off happened. There are several reasons, but it doesn't even matter too much. By the way, today, huge day. We've got this PCE stuff, which is their new CPI. It's just more manipulative, let's say. Then you got GDP, initial jobless claim. So today we will have moves, especially GDP. So the market's gonna move anyway. And if it continues in that same direction, big move down, lower. If it reverses, we'll probably have resistance at the top. But yeah, Nasdaq, look at the S&P, same thing, huge bearish, definitely continuation, at least back to breakout because the move we've had is insane. And this move, I think it's like they're front running the rate cuts next year, the three rate cuts. So I think a lot of that's priced in. I also think that inflation is going to make a return, especially with the dollar having come down a bit. So maybe rate cuts will surprise everyone. So I think this market run up has been crazy, but I've been wrong about the market run up because I thought, as we were coming down here, yes, the bounce for sure, but I thought we'd come back down again. I thought we were in a bear market. We are, I mean, in a bad economic situation, but the fact that we were able to rise all the way back up to the old highs is just, I mean, the market's been crazy for a long time. It hasn't really made sense except inflation. And I was thinking maybe this is actually like Zimbabwe, like Argentina, like Weimar Germany, the economy is horrible, huge depression, but the stock market kept on going up because stock market is a great place to hide and it's inflation. I think that's what this is. This is just inflation. You know, it's because of inflation. And I had this suspicion when I saw the European markets, they made a huge move up before the US markets. They were already testing and making new highs, whilst the US markets were sort of down here, bouncing a little bit. I thought, why is no one addressing the reason why the German market, okay, the UK market also made a bit of a return, the French market, they all made huge moves back up to new highs. And then the US markets have done it now. And I think it's just inflation. So, that can be the only reason, really. But anyway, point is, I want to keep this really short. The markets are due for a drop because look at this ridiculous vertical move up on rate cuts. And even if you cut rates three times, like three times 25 basis points, I think the economy still can't handle where interest rates would be then, and they still can't handle them now. So the economy fundamentally isn't that good. This is just inflation. But look, all that stuff aside, this market needs to come down, and that's what this type of a candle means. So let's see what happens today with this. But the other thing is, it also had an effect on the miners. So I actually nibbled a tiny bit out of my positions where I was too heavy. Not at the low of day, thankfully, but I just have a feeling that it could take the miners down a little bit. And look at this huge move up we've had. If we come back down a little bit, I mean, it could come back down quite a bit. It could take the miners down, 2, 3, 4, 5%. So I just nibbled out the places where I was a bit too heavy, including Wheaton, which I wanted to liquidate. I'll get to that later, later this week or the weekend when I go over my portfolio. DXY, by the way, middle of the range, we're stuck between this area, just below 102, actually, 101.8. And here, so today it will move. If we move up, I'd expect a bit of resistance on this descending line. And if it somehow breaks through there, I would expect resistance here, 104-ish, where we had resistance before. If it flushes, it will probably go through and it'll probably close below 101.8 here. And then we come back down to the old level, 100.8 or 101, which was the line in the sand here before we flushed. And that's when everyone thought we were going to go much lower. So watch out if the DXY comes down. That will help gold and silver. That will probably help the miners. Let's just see what the market does. It's time to look at the market a bit too, its effect on the miners. But definitely the dollar coming down will help gold and silver, and that will definitely help the miners. So that's DXY. Interest rates, by the way, another reason why I thought markets should come down, especially yesterday. I'm looking at the markets thinking, well, the miners may take a hit. Look how much interest rates have come down. They're due for a bounce. I thought they would bounce. I was timing it with 30. I thought they would bounce maybe here. I mean, they did because of the ascending. Then they flush, kept going. Here, we're pretty much still around there. I just think they're due for a bounce, probably back to this ascending. But then that's when I'm thinking, okay, well, how can interest rates go up and the dollar not go up? So, I'm just watching. But the point is, interest rates have come down a lot. And I reckon they're due for a bounce, just as I reckon the markets are due for a drop because they've gone up a lot. So watch interest rates, watch the dollar, watch the markets, and then of course watch the metals. And by the way, the metals, though, all stuff aside, they're still in a holding pattern. They're still flagging bullishly. Yesterday, even at the worst period, it was still quite decent. So let's hopefully the market doesn't destroy what looks like a nice build, like a nice pattern here, like a bull flag basically up and then sideways up and then bam. So if the dollar drops and gold pops and gold closes, let's say above 2050, I don't see why we don't go to 2080. And maybe, and I think this would be the best of both worlds, maybe the market drops, gold goes up and the miners go up with the metal. And basically the miners are the only refuge in town. That would be great because they're the one sector that hasn't really participated in the rally that much. So look, yes, this looks like the market's candle yesterday. Close at low of day, doesn't look great, but look, it's still in that holding pattern that gold's in. So I just hope that the miners follow the metal rather than the markets because I reckon the market's going to go lower. And well, it depends on the news and how the dollar reacts. So I'll leave it there. I like it nice and short. I've pretty much covered everything. As for the other commodities, actually, really quickly, look, copper's doing quite well. It bounced between these two levels. This is the channel. I think it was well identified, 3.9-ish, and then down here, 3.72. Really been holding, popping, bouncing between both levels. But copper, did okay, given normally it follows the markets. Natural gas, I mean, this one I've gotten wrong. I thought we would bounce a bit like interest rates. I thought we'd bounce a bit earlier and then we just flushed. I mean, this is horrible, horrible weakness, and the chart is destroyed. It's going to take a long time to get back all the way up here, 3.6-ish, but we could probably test 3 again on a nice move. But this is kind of destroyed, and to be honest, this is actually redundant. So yeah, natural gas was I didn't foresee that weakness. Oil, yeah, bounced to 68. That's nice. Let's see. That's does it follow the markets? It didn't really yesterday, which is interesting. Keep an eye on oil a bit more. I really think it should come back up and test this descending line. So maybe 78. But this is impressively low. I didn't think we'd get this low. And uranium just still doing its thing, holding. Bit of weakness there, though. That's a little chance for people like me who are still not in uranium, but I expect so much strength as it comes down here. If it comes down here with the markets, that's really a gift. But well, let's see. The markets could come down quite a bit. So maybe we go down to here, let's say 27. If it flushes some more, where it should find support, and if it goes down even lower, I'd expect a lot of support, on this second ascending line. Okay, that's it. That's a bit of commodities, a bit of dollar, a bit of interest rates, a bit of markets. Just a quick recap, but it's getting interesting. I reckon the key points are the markets should keep reversing a bit. Obviously, we have news today. We have news every day, but today looks pretty jam-packed. But let's see if the miners follow the metals up or do they follow the markets lower. That's my key concern for now. Guys, enjoy the day.